You're okay, definitely.
Hello, this is Brian Tehako doing a webcast for NakedTrader.com. Today is October 7th, pushing around 11 a.m. here in Chicago time. The day before the big unemployment report for October's for September. Big thing today, big numbers we had today was initial claims, continuing claims, and chain store sales. Initial claims came out a little better. We were looking for 455, came out 445. So slightly better on that. But continuing claims came out a little worse. Looking for 4,450, came out 4,462. So we pretty much would call that a dud number overall. And usually these numbers before unemployment, these initial claims are kind of a dud anyways. Nobody's going to pay too much attention to them. Chain store sales came in a little bit worse. Kind of expected that. Came out 2.9%. Looking for 2.9%. Came out at 2.6%. So overall, pretty quiet day for numbers per se. The big thing though today is we actually had a pretty big reversal in the euro currency and the dollar. Came in and the euro was making basically new highs, contract highs, and we did a spike up to 140.20 area in the euro pretty much after those numbers. Trichet was speaking, didn't really say much of importance, and then we just had a reversal of basically 100 straight ticks down, trading around 139.15 right now. So that was a huge move, and we got a reversal in the dollar also, obviously off of that. Thing is, right now, we've been trying to be short this euro currency the whole time. Been getting stopped out on it twice, trying to stay short it. We are short real small right now again. The spot that I noticed was 139.90. We had huge selling there at 139.90. And they kind of did that push through up to that 140.20. Came back down at 139.90 again and just saw massive selling again. So personally, I'm going to say stay short below 139.90. If you are short now, if you want to get short, that would be my spot to stay short. I think that spike up, the 30-tick spike up there, I would discontinue. I think the big value, it seemed like 139.90. Like staying short there. On a big picture overall, they just really came in and just smashed everything around, looking like a dollar rally. They hit oil, they hit copper, which made a huge retracement today from the highs, which basically kind of got the ball rolling. And off that copper, you could kind of look to see everything else came with it. Silver went, gold went, oil went, the whole thing came off. And equities did come off from their highs, but they're just kind of in a lull right now, which is understandable going into tomorrow. But I thought maybe we'd see some positions squaring up. And I'm even surprised this euro hasn't come off even more going into tomorrow also. Tomorrow being the unemployment number, we are looking for a change in non-farm payrolls at negative 5,000 and a change in the private payrolls of positive 75,000. And unemployment rate to stay at 9.7. Again, we're so tight in this stuff that I think if you get anywhere outside of a 50K jump either way, I think this market could take that as good and bad. The problem is what's good and what's bad. If you get a really bad number, I think you're going to see a move down in the equities, but then all of a sudden the QE stuff starts to play into it. And if you get a really positive number and it's like the economy's changing around, then all of a sudden it's like, okay, maybe we won't get QE. Like we talked about before, I said in one of my webcasts before, I mean, it's just complete crazy land because everything can be looked at reversed. Everything can be looked together. I mean, you got inflation, deflation. You know, it's just a really tough environment right now when you have the Fed looking at it basically as a cash register for the whole world. So basically, talk about the E-mini ranges. We still have that 1160 area. It's still holding. It's still our main resistance. We got above it today a little bit, but we still like selling it at 1160. Basically 55 half now we stay below is kind of some short-term moving averages to stay below. I think that would be a bearish sign to stay below there today. And then if we start selling off, we basically got a big range of 34 in the orders all the way down to 27.25. In the middle of that range is 30.25 is your 20-bar moving average on a daily chart, which can really start get below there, start turning down, can really move this market down on a long-term basis. Looking at all these charts, looking at all the products, today was kind of that first day of things kind of changed, and they changed really fast. And they changed dramatically on the products, and charts now are starting to point negative towards a lot of things, including the metals, including the oil, including the euro currency. So be aware of that going into the close today. Again, like I always am, at the end of the day today, I wouldn't want to be long equities going into today where things are standing. I'd rather be short than long, and that is about it. So otherwise, from here, we're pretty much cleared up on most of our positions, trying to stay flat going into tomorrow. Like I said, we're short a little bit of euro currency. Might try to take it into the end of the day, but depends where stuff settles out here to take it into the number tomorrow. Other than that, I would say keep your nose clean for the rest of the day today. It looks like it's just going to be a chop fest in these equities, and everybody's going to be waiting for tomorrow at 7:30. So, again, this is Brian Tehako doing a webcast for NakedTrader.com. And if you're trading, don't be drinking.